So did you happen to catch the headlines recently, about Bitcoin suddenly surging, or maybe saw those big green arrows next to your crypto stocks? If you did, you probably found yourself wondering, okay, what just happened? What in the world of finance sent digital currencies, well, absolutely soaring like that? Well, you're definitely in the right place, because today we're taking a deep dive into exactly that. And look, this wasn't just some random market blip, not just volatility. It was really a direct, pretty powerful reaction to that highly anticipated speech from Fed Chair Jerome Powell, the one he gave at Jackson Hole Friday, August 22nd, 2025. Our mission today really is to unpack the reasons behind this sudden shift. What did Powell actually say that caused such a stir? And fundamentally, why did it light such a fire under riskier assets like crypto? We want to give you those key nuggets quickly and clearly so you can really understand the why behind those headlines.
Indeed. Yeah, for anyone watching global markets, I mean, the Fed's stance on interest rates, it's just one of the most critical pieces of information out there. And Fed Chair Powell's words, especially at a place like Jackson Hole, they get scrutinized down to the syllable, looking for any tiny hint of a policy shift.
Right. Every comma matters.
Exactly. It's one of those events where, just subtle language can move markets by billions. And this past Friday, a perfect example of that.
Okay, so let's unpack this a bit then, because the lead up, well, it was actually pretty tense, wasn't it? What we're hearing from analysts and sources is that a lot of crypto traders were, maybe surprisingly, bracing for the opposite, for things to go down, not up.
That's right. Positioning for an upset, kind of a risk-off move. Some were even actively selling spot Bitcoin. They were anticipating more hawkish comments, tougher talk from the Fed.
Right, because the general feeling going into that speech,
Yeah.
it really leaned towards the Fed just holding steady, right? Sticking to that cautious path on rates. We heard it all year. Inflation's the main fight. Jobs market's solid.
Yep.
Rate cuts seemed, well, pretty far off, maybe not even on the table. So the expectation was just more of the same, maybe even hinting at more tightening.
And what's so fascinating, and I think what really caught people flat-footed, is how fast those expectations just got completely flipped. Powell's comments were, well, surprisingly dovish. He didn't just hint. He pretty clearly signaled potential rate cuts soon.
Soon. That's the key word there.
Absolutely. And to really get the impact, let's look at his exact words. He said, and I'm quoting here, "Overall, while the labor market appears to be in balance, it is a curious kind of balance."
Curious kind of balance. Interesting phrasing.
That results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising.
Okay, unusual situation, downside risks rising. That's not the usual strong jobs market talk.
Not at all. And he didn't stop there. He followed right up with, the shifting balance of risks may warrant adjusting our policy stance. Now remember, the Fed had held rates steady all year, citing that strong job market, worries about tariff inflation.
Right.
So suggesting they might adjust our policy stance. That wasn't just a subtle shift. It was a major change in tone, a real signal they were open to easing up.
That language, curious kind of balance, unusual situation.
Yeah.
It feels very deliberate. What's the subtext there? What are market folks reading into that beyond just the words?
Oh, absolutely deliberate. He's walking a fine line. He doesn't want to cause panic, right? Can't signal an imminent crisis. But by calling the balance curious, he's hinting the Fed sees something deeper. Maybe structural shifts, maybe weakening demand that isn't obvious in just the headline unemployment number.
Okay. So it's not a flashing red light, but more like a yellow warning sign they're acknowledging.
Exactly. It suggests the economy might be a bit more fragile than they previously let on. The downside risks to employment aren't about mass layoffs tomorrow, but it's a heads up that things could worsen, and that means the Fed should maybe get ahead of it, be more accommodative.
Preventative, not just reactive.
Precisely. It's the Fed managing that dual mandate inflation and employment, and right now the employment side seems to be weighing a bit heavier.
That makes a lot of sense. He's threading the needle.
Yeah.
And clearly the market heard what it wanted. And the reaction, I mean, this is what really hits home for listeners, right? How fast and how dramatically this translated into actual price moves.
Well, instantly.
If you were watching Bitcoin, BTC USD, it was trading around $116,500 not long after, up from below $112,000 that same morning. That's a huge jump in just hours.
Massive move.
And it wasn't just Bitcoin, was it? The rally felt much broader.
No, definitely not isolated.
Those key Bitcoin proxy stocks, they surged too, which kind of confirms that wider risk-on feeling.
Sure.
MicroStrategy, MSTR, the company holding loads of Bitcoin, it jumped over 5%.
Right.
And Coinbase, Coin, the exchange, up nearly 7%. That tells you institutional sentiment was shifting fast too. Even other big altcoins like Ethereum, ETDUSD, and Solana, the SolUSD, they saw really solid gains. It was like the whole digital asset space got a shot in the arm. If you were watching your portfolio, it must have felt like someone hit the fast forward button.
Huh. Yeah. Market rocket is a good way to put it. But, okay, beyond the price charts flashing green, what's the actual economic engine here? If we zoom out a bit, the basic mechanism is actually pretty straightforward. It boils down to this. The prospect of lower interest rates just tends to juice investors' appetite for risk.
It's almost like a Pavlovian response for the market sometimes.
It really is. It's foundational finance, right? Think about it. When the cost of borrowing goes down or the return you get on super safe stuff like government bonds drops.
Yeah, they become less appealing.
Exactly. Those safe investments look kind of boring, maybe not even keeping up with inflation. So naturally, money starts looking for a new home. Investors are more willing to move that capital into things that seem riskier but offer potentially much higher returns.
And crypto definitely fits that bill.
Oh, absolutely. For all its ups and downs, crypto is seen as high beta, high potential. So when risk appetite increases, it benefits. And Powell's reasoning those downside risks to employment, the unusual balance, that was the key. That explained why the Fed might cut, and that's what unleashed the bulls.
So, okay, what is the signal for the immediate future then? This shift in sentiment, it wasn't just in prices, right? It showed up in prediction markets almost instantly.
Immediately. And those markets are often a fantastic real-time gauge of where the collective head is at.
Yeah, and this is where it gets really interesting because our data shows that before Powell spoke, there was actually a pretty big split. Crypto folks' expectations for a September rate cut, they were quite different from what traditional finance investors were betting on.
That's a really critical point. It wasn't just a small gap.
Right. It suggests these two camps were pricing the future very differently. Crypto investors, maybe with that higher risk tolerance, or different models.
Or just more sensitivity to liquidity, perhaps.
Yeah, they seem to be betting on that dovish pivot even when the TradFi world was still cautious. Still maybe thinking about inflation.
It really highlights the different operational mindsets, doesn't it? Traditional finance often needs more concrete proof, maybe more cautious, reacts with a bit of a lag sometimes.
Data dependent, yeah.
Whereas crypto natives, they often seem more forward-looking, maybe even trying to front-run things. They're often quicker to react to subtle hints, especially around liquidity and risk. Sort of the canary in the coal mine.
That it fits. So Powell speaks. How quickly did those views line up? Were the numbers dramatic?
Oh, the alignment was almost instantaneous. Really stark. Take Polymarket, a big platform for, crypto native bets and sentiment. The odds of a quarter-point cut in September, they jumped to about 80%.
From what?
From just 56% before the market opened that day. A huge leap.
Oh, okay.
And then look at CME FedWatch that tracks the big money, traditional finance expectations via futures contracts. It showed an 87% probability.
And that was up too.
Yep, up significantly from 75% just the day before. So boom, suddenly everyone's on the same page. Both camps heard Powell and basically said, okay, cut's coming.
That's a powerful convergence. But it does raise a question, maybe for you listening. How do we square this? The Fed's earlier cautious stance, holding steady, and now this sudden dovish turn. Is it a complete 180?
Good question. And no, it's not really a full U-turn. The Fed tries hard to avoid those whiplash moments,
Right.
For credibility, it's better seen as a sensitive reaction, an agile response to the data changing on the ground.
Adapting.
Exactly. Powell's careful language about the labor market, unusual situation, downside risks, it wasn't him yelling fire. It was a more nuanced signal. The balance of risks has shifted just enough that policy needs to lean a bit more accommodative now.
Okay.
It goes back to that dual mandate again, inflation and employment. When one side, like employment stability, starts looking a bit shaky, the Fed's job is to adjust, to support it. It's about being data dependent in real time, not just sticking to an old script when the facts change.
Right, it shows flexibility.
Yeah.
Being proactive maybe, instead of waiting for things to really break.
Precisely. That's the ideal scenario anyway.
Okay, so let's do a quick recap of our deep dive then. We saw Fed Chair Powell deliver surprisingly dovish comments at Jackson Hole. He hinted at rate cuts coming soon, pointing to shifting economic risks, that unusual balance in the job market. And that triggered a massive, almost immediate surge across the board. Bitcoin jumped, key crypto stocks like MicroStrategy and Coinbase soared, and other altcoins followed suit.
A classic risk-on rally.
Yeah, a textbook example, really, of how the prospect of lower interest rates can boost risk appetite, sending money flowing into assets like crypto. And we also saw how that initial split in expectations between the crypto crowd and traditional finance just snapped back into alignment right after Powell spoke.
So as you think about all this, here's something to chew on. If just that subtle, nuanced language about the labor market from one person, the Fed chair, can so dramatically shift the immediate path of something as dynamic as crypto, what other subtle shifts might be happening right now? Maybe in economic data we don't always focus on, or even just in the careful phrasing used by central banks that could be quietly shaping the future of your investment landscape. And, maybe more importantly, how ready are you to spot those signals, to really interpret them, before the rest of the market catches on?